Gene, I mean, I know why the disappointment is there, but is the disappointment justified and warranted?
I got to make a difference between the stock and the business. And from the business perspective, it's not warranted. This company has become even more the fabric of our lives. Grew retail at 13% off of an incredibly difficult comp. Everything is firing on all cylinders. I think that there's a question about if their margins can be better, but for a different minute there. But I think from a stock perspective, this is essentially begging a question that has been around Amazon for a long time, is what is its true growth rate? And what we're seeing here, of course, this is the A topic for most tech companies. But the true growth rate is probably going to moderate to 15% for next year. If you look at the midpoint of their guidance, which their guidance was correct this last quarter, analysts went ahead of it, it implies 18% from more recently 45. So we're going from 45 to 18 to 15 next year. And that is a question. And what that means, Dominic, in my mind, when you see that, is investors take a step back and do a re-rating of the multiple. And you're seeing some of that today.
So, I mean, we've spoken at length in the past with you and others covering Amazon about this notion of where you emphasize kind of like the news coming from this company. It used to be years ago, and maybe even so to a certain extent today, that it's about the online platform, the retail platform, and everything else. And yes, that came in disappointing. Is there a tilt in your mind about where the news flow is? Is it very much more about Amazon Web Services and cloud computing now than the online platform and for marketplace items itself?
I think yes. The simple answer is that still retail is the dominant part of their business. AWS is just over 10% of their business. Their advertising business, which grew at 87%, is, call it, just about 5%. So collectively, those two meet this kind of 15% threshold for investors. So yes, those are going to become a bigger part, but you still need to recognize that this is predominantly a retail business. It's not a mixed message. Retail still matters. These other things are getting attention, but retail matters. It's kind of like Apple with the iPhone, is that they can have services do great, but unless the iPhone's doing great, investors aren't satisfied. And so we kind of circle back to a secondary topic, too, which comes in and out of favor, which is the question of profitability. I want to quickly highlight that. Is that Amazon is a tech company, there's no doubt, but the margins that they have are not tech-like. This is operating margins of 6 to 8%. Google, Apple at 30%, Facebook at 42%. And I think that the question, the stock, the next move higher in the stock, I think needs to come around margins. Now, they're not going high anytime soon. CFO said on their call that they're continuing to be in investment mode. But if I was in Jassy's role, I would really focus, make the A topic around automation. They have 1.2 million employees. They added 65,000 the most recent quarter. They have a huge opportunity to take automation, robotics, to reduce costs. Human costs were the biggest X factor in their operating expense this quarter because of the tight labor market. They have an opportunity to move their margins much higher in the years to come. I think that's going to be the new A topic on Amazon in the future.
So, I mean, with that as the A topic, then you have to look at the competitive landscape, right, for this particular company, because on that online retail side of things, you've had, I mean, they're the top of the heap, right? Everybody's gunning for their market share, and many other companies have kind of made incremental gains since the COVID pandemic started. Amazon has come out a winner, no doubt. But then that margin story has to be driven by where it has real competitive advantages, right? It has to come from, say, web services or maybe even online advertising if it can make inroads against companies like Facebook and Alphabet.
Those are areas that they need to make inroads against Facebook, like you said. I see their competitive advantage as really around infrastructure. I remember covering Amazon 12 years ago, and they're making investments in infrastructure, and investors wondered why a tech company would be doing that. It turns out that has become the infrastructure. Actually, the fulfillment centers, the trucks, the ability to get your packages to you quickly, that becomes the competitive advantage. Now, I would put it in this context. if someone would give you and I $100 billion and say, go start a great e-commerce company, I think the best thing for us to do would be to return the capital back to the investors, because to compete with Amazon is on their infrastructure side is incredibly difficult. And that, to me, is the opportunity, is to take the advantage that they have around infrastructure that does not have a cost advantage today, but to add efficiencies and automation into it to improve margins.
Shepard Smith here. Thanks for watching CNBC on YouTube.